So I've eaten a steak a day for probably the past 6 years.
Meet the 25-year-old whose AI investment platform
It started as just a way for my friends and family to copy some of my strategies that I've been creating in college.
is managing $150 million in user investments.
Your own highly personal AI, financial advisor.
Is training ground for stock trading success?
So I'm big on poker. I like the decision making. I like kind of brain games. I like puzzles.
He spotted Wall Street's blind spot.
They're more incentivized to maintain relationships as they are to build, the winningest portfolio.
The price of building his vision?
Once I burned out for probably the 18th time, I kind of just say, all right, product is built. It's time to focus on.
Welcome to Entrepreneur in Action. Today's guest is Logan Weaver, founder of Surmount AI, an automated investing platform.
Thanks so much for having me. I'm excited to be here.
In this discussion, we talk about finance, fitness, family, and fun, but we always start with your business. So tell me about Surmount AI.
Yeah, absolutely. So basically, it started as just a way for my friends and family to copy some of my strategies that I've been creating in college, and then quickly found out that this was something that could be applicable for other people. So kind of launched publicly about a year ago. We have a bit over $150 million investing through basically data-driven investing strategies on the platform, and just overall super excited. I think that this is where the space is heading, but ultimately just to, I guess, kind of get our elevator pitch in there. You can think of Surmount as kind of, you can have your own highly personal AI, financial advisor, or you can just use pre-built portfolios, strategies made out of the box by your favorite investors, by creators, by companies. So that's kind of where we fit in and what we're doing. And overall, again, just super excited to be here.
That's amazing. So I'm your new customer and I go to Surmount AI, right? I go to Surmount AI. How does it help me? What problems does it solve for me?
Yeah, absolutely. Basically, it's most of the same stuff that you would be paying a financial advisor 1%, sometimes more, sometimes less to do. So tax harvesting, position management. It can manage most of your existing investment accounts. So your Robinhood, your Schwab, your Coinbase, etc. So right now it's equities, crypto, forex, but ultimately we want to be able to kind of be the place to go to manage your investments intelligently, strategically, for kind of like this new software-driven age of investors. So we tend to perform pretty well for people that hop in, 40, 45 and under. But I think, just kind of the people that don't want to settle for their parents' financial advisor, right? Like these are the people that don't necessarily want to have to call up to get a quarterly report. They want to still be making decisions in terms of what strategies, what portfolios might be a good fit for them. But not necessarily making all the decisions day to day. And this is a way to outsource a lot of it.
Yeah. So I have friends, I know people who have a financial advisor and they rarely, one person that I'm thinking of in particular mentions that she rarely wants to contact the person because she wants them to be busy managing the money. Right?
Yeah.
So, but I know that a lot of people want to be more hands-on. They might not have that same level of trust in someone else to manage all their money for them. And this feels like a way, by going to, your platform, Surmount AI, where you could have a little more of a hands-on experience managing your money for people who are comfortable with that.
Yeah, absolutely. Like that's kind of where we want to be is I think the options right now are basically just completely set and forget. Or make every decision, micro decision analysis on your own. And we kind of wanted something that was in between, because that's how I personally, I love to invest, but at the same time I just don't have the same time that I did a couple of years ago when I was in college. So I still do research, I follow a couple of companies, but I'm definitely not adding new investments to my portfolio like I was at one point when I had the time to do more research. So for me, I mean, it's a way to kind of still get exposure to some of the up and coming companies, maybe whether that's in different industries and different countries even. So it's been exciting. And I think that's a perfect way how you described it is basically the right way to think about Surmount in terms of you can be kind of as hands-on or hands-off as you want to be. So you can go in and, be as active as you want. You can be running, day trading strategies. You can be making your own trades, or you could just kind of say, hey, here's what my objectives are. kind of reverse engineer. Okay, that means that based on my objectives, my risk score, all of that, this is a portfolio that could be a really good fit for me, and basically kind of get that same highly personalized experience that you go to a financial advisor for, but it with much more dopamine hits, right? So nobody gets a dopamine hit from calling up their financial advisor, having to wait, all of that. Like this is instant. You're kind of in control, but at the same time, have like a basically like a co-pilot there with you, and you can be as flexible. If your financial situation, your goals change tomorrow, it can change as rapidly as possible. And you can think of it as way to where, like, in kind of the old age, if I'm a financial advisor, right, and I have 30 clients, that's 30 accounts I'm managing. Whereas this is, you're basically like the software is one client, so it's highly personalized to you. You really get that great experience, and overall, just try to get people into smart investment products that can really set them up for success over the next 5, 10, 20 years.
And one thing I noticed you mentioned earlier that the investor who works for you personally, right, or maybe has 30 accounts that they're managing, they're taking 1%. So how does that compare with the fees on Surmount AI?
Yeah, absolutely. So for the majority of our investors on the platform, it's basically just a flat fee. One of the questions that I joke all the time that if you pull 50 people out of a crowd that are working with advisors and ask those 50 people how much are you paying this advisor on a yearly basis and how are they performing comparatively, it's really hard for people to answer those two questions. So one of the main things that we wanted to do is say it's very clear what you're paying on a monthly, on an annually basis. So monthly it's $20 a month. Annually it drops down to half of that, so you're paying $120 a year. And basically wanted to help to cut out that uncertainty around being able to answer what are you getting for how much, essentially, at the end of the day.
And so you mentioned like you can get into some like different investment strategies that it sounds like they have a theme. So and if I look on your website, I see like, oh, there's future consumer tech is like one theme, or like black owned businesses. Like, why would somebody want to invest based on a theme?
Yeah, no, that's a really good question. So, thematic is a big portion of what we do. So, trying to basically invest in ideas, right? So for me, like I'm big on quantum computing, for example. So we have a couple of strategies, portfolios that might be a good fit for that. So it's really just kind of the way I think about it. If you're on a traditional robo advisor, you fill out suitability, you fill out, the know your customer information, and then you kind of get met with a portfolio that you can't change too much. So you want to have a broad range of options to where kind of instead of, I know a lot of like professional investors, especially, will have like a sector rotation system within their portfolio that kind of adapts to the market. So we kind of wanted to do that, but with more of like an idea or like strategy rotation system where it's like you find your batch of strategies, you're basically portfolios of one larger portfolio that really resonate with you, how you think about the market, where you're just again your kind of risk tolerance, your timeline, where everything kind of as you as an investor are at, and then it just you can kind of create a super custom portfolio for you. And then also the really neat thing about Surmount is make it easier than I think ever. I haven't seen another platform that really does like the creation as much as we do. But you can basically take anything that AI or anything off the shelf, and you can customize it. So if you say, I really don't want to invest in Nvidia, I think it's just so high right now. Like you can really make edits and just add to that level of personalization. So I think that's kind of how we can stand out in terms of what is on the market, and again, just giving investors that hands-on and or hands-off, experience to where they can kind of, they can set and forget if they want, or they can really make something that's highly bespoke to them.
So is this the same thing as creating your own ETF? It's like a basket of stocks that you're investing in. And is that what an ETF is? And are you creating your own?
I mean, technically, I wouldn't go as far as to say like we do have an ETF builder on the platform, which is like basically our simplest builder of just full no code. You can build your own data driven portfolio without writing a single line of code. But technically, of course, they're not actually publicly traded ETFs. We are exploring a couple of projects in that world, but even then, it's more so like your own personal ETF is a way to think about it. But definitely what you said, there's a lot of overlap in terms of how ETFs are structured, managed. We just want to, again, get that management fee a lot lower than what investors are getting pretty much anywhere else right now.
So if one were to buy like a traditional actual ETF that's not just your personal ETF, but it's on the market, what are the fees they would pay for an ETF like that versus like the product that you offer, or which we're calling, for sake of for lack of better words right now, your personal ETF, which is it's not an actual ETF, but you get to make your own.
Yeah, absolutely. So that's a good question. I think it really depends on what you're investing in, right? Some have different expense management ratios than others. But with this, again, just going back to that, it's one consistent fee. You don't have to worry about option A versus option B. Really that $120 if you're going on the yearly basis, you can get as many strategies, as many portfolios as you want within that. So again, I think we're just priced a little bit differently because I think just the way I see investment management in general, I think for whatever reason, pricing has been kind of this like unclear, oftentimes situation. Whereas I think everything is really leaning a lot more towards the consumer, making it as easy, as understandable for them as possible. That way they can essentially say, is this a good fit for me? Yes, invest. No, keep moving. And really that's, at the end of the day, the decision that you should be giving, clients, not, okay, how much am I actually paying for this? Trying to dive into, some small, some small text. Like it should really be an experience that is enjoyable. It should make investing feel approachable. And again, that's what we're all about and what we're going for.
So what I'm hearing, like, it sounds really easy to use. It sounds very affordable with transparent pricing. What are some of the objections you hear, and how would you address those objections?
Sure. I think, the most common are probably one is that we're just young. We're a young company, especially when dealing with people's money. People like to see that track record, and we are building that, pretty rapidly. But at the same time, some people still just want that, that Schwab, the company that's been around for, ages, and that your parents and, grandparents were using. That's definitely, understandable. I think all we can say to that is, give us time. And then the other one that I get pretty frequently is, just kind of an uncertainty around, if you're investing in more of our like AI features, um, what that experience looks like. And again, I think it's really just comes down to level of comfort, level of, feeling of safety when investing with a new software, that to a lot of people haven't used, any machine learning algorithms to, manage any, money or, help them with taxes or anything of that nature. So I think, again, it's just, we're still kind of, even now, with where the market's at, people are flooding into AI, and I think we're still just kind of at the beginning of it. I think in 5-10 years, you're going to see so many more people, investing with AI. I think you're going to see, in professional investment managers, starting to really adopt AI, et cetera. So I think it's going to become a lot more popular in the space. Right now, just machine learning, AI, for a lot of people are just like these buzzwords that they don't fully understand, that you just kind of have to educate them on a little bit. And then that's also why we have some options where it's like, all right, if you still want to just, work with a person, work with, a completely discretionary or, human managed portfolio, you can still do that as well. I think ultimately in, again, 5-10 years, that's where a lot of the space is going to be. And right now we're just kind of early, and I think the consumer is still kind of testing it out and, seeing ultimately what are the results over, course of 2, 3, 5 years.
So what does that look like? If I want to work with an AI money managing aspect of your platform, how does that work? What am I going to see as your customer?
Yeah, absolutely. So that's a good question. So one of the first things that you see when you sign up to Surmount is you can actually connect all of your investment accounts to our dashboard securely. Everything's through bank level encryption. That can kind of help to, not a requirement, but if you want to kind of build an additional profile for the AI, it can actually see all of your investments, all of your in many cases historical account activity. It can really start to understand you as an investor. And then, basically with a couple of super brief questionnaires, sometimes, just making some iterations as you go, but it can really start to understand you very thoroughly, just as, a traditional financial advisor would. And then basically just, help to, manage your portfolio or portfolios in such a way that really, you know, is personalized for that, basically. So, I think one of the big things right now that's gotten big in the space over the last 10, 20 years is basically just RAAs and even some of the robo advisors, basically just being like an AUM, assets under management funnel, for some of the bigger funds. Whereas instead of taking that approach and saying, hey, we're going to get you in Vanguard portfolios ABC, which people are doing fine investing in that way. But we just think that for the modern investor, having something that is a little bit more personalized, where instead of just kind of cookie cutter portfolios, it's something that's made for you, investing in, highly, trustable, solid companies, but still might not be the same exact makeup as you would get in, a Vanguard or something of that nature. It's going to be a little bit different, just kind of probably a little bit more adaptable to you, just again, because it's, you're basically the only portfolio that it's met.
Yeah. So I think this is fascinating, right? Because you have now not a 1 to 30, like a relationship that felt like 1-to-1 with your financial advisor, but really, for them to make their money, they have to actually manage 30 people like you. So you're really getting what is a 1 to 30 relationship. And there's some pros to that too, because they're learning from their other clients as well. But with the AI, it really does feel 1-to-1, because you're working with the AI's brain directly, and it's able to really focus. It doesn't get distracted, and it's able to hone in on exactly what you want based on your, and then you could have a conversation if you feel like it. Like, how would you talk to the AI? Is it like a prompt that you enter on your platform? Like, how would you have a discussion? For example, say I'm a customer and I want to have the AI work with me, but then I see the AI made a suggestion to invest in something like an NVIDIA or something where I'm like, well, actually, that's not 100% what I want right now. How would I then let the AI know that's not really my direction? Actually, I want to go in this slightly different direction, or a completely different direction.
Yeah, sure. So you can either, depending on the context of where you're at in terms of usage of the app, you can either close that position, cancel it if it's never opened yet. But you asked about like how do you interact with the app. So right now everything is just like text based. So you just basically interact with it through writing prompts. We are building out some pretty cool features right now where ultimately we want it to be to where you basically can interact with the AI just like you would a financial advisor, to where you can text it if you want to. You can basically press a button and interact with it, voice to text. So basically just making that consumer experience, trying to make that feel as organic and as kind of close to home as possible. But just to answer your question right now, it is solely text-based. In the very near future, you can expect to see that kind of expand a bit.
And you mentioned also managing the taxes. This is a huge part of any investment strategy, right? We have to minimize the taxes we pay so that we can reap the benefits of the investments that go up. So how is that going to work with your platform and with AI?
Yeah, absolutely. So basically, tax loss harvesting, it's one of the the big things that we pay financial advisors to do, is essentially say, at the end of the year, maybe I'm supposed to pay X. I'd like to pay X minus whatever percent. So this is a way where AI will essentially help to manage your positions with kind of your tax harvesting threshold, basically settings in mind. It will open, close, adjust positions based off of that, and at the end of the day, like ultimately how long you're holding something. So it'll look at all the same information that again, like a traditional advisor would, and make decisions based off of that. You can set it to where A, it'll just do that automatically, or B, to where you have to approve it in order for it to, it'll basically give you a recommendation. You can say, yes, it'll go forward and carry out the action, or you can say, no, and it will not. So you can choose whether it does that for you completely automatically, or whether there's some sort of, of your intervention involved. But yeah, it's ultimately, that's one of the coolest features. I'm huge on that because really we built that because nobody else had. And that was one of the things that we needed for basically everything else, and looked around for some third-party software, didn't find anything, and ultimately just built that in-house. And that's one thing that we're really proud of. I think that's, I'm excited to see the statistic at end, next month of how much have we actually saved people this year compared to how much they would have paid otherwise.
Absolutely, it's taking into account like what the tax amount will be on all the transactions it's making. And then it can print that for you to the screen on your dashboard. And you can see like, this is what I'm going to be paying in taxes. This is maybe how much I've saved. How does it save? Does it save you like with the tax harvesting?
Yeah, so basically that's just comes down to, for an example, let's just say, something super trivial. Let's say I have been holding a stock for 360 days, and if I hold it for a few more days, then I'm basically in a different tax bracket. So I want to sell it now, but it'll actually say, though the strategy, or maybe I'm saying I want to sell it now, whatever it is, it'll basically try to avoid that, because if you sell it now, you might pay X%. If you sell it in 10 days, for example, it would be a lower percentage. So that's just one way, just one example of maybe how a tax harvesting ML model might be able to actually at the end of the year save you money.
So in that example that I heard, right? So you got this stock that you've held for nearly a year, and because it's gone up a certain amount, if you sell it right now, maybe you would pay 40% tax rate on it. But if you wait just another week, you'll have held it for longer than a year, and now the tax rate goes down, so you would only be paying 15%. You'd save
Exactly
25% of the tax that you might owe otherwise. So the AI will give you like a message like, if you wait another week, this could be very beneficial. Is that
Yeah.
how does it?
Yeah, you basically hit the nail on the head. So basically just some of the same things that I feel like we're currently missing from the no commission brokerage apps, which are great and everybody's using these days. But again, just most people aren't a financial advisor, so just kind of having that co-pilot that can help you manage your investments as intelligently as possible and kind of as professionally as possible, in a way that's easy for anybody. You don't have to know about markets. You don't have to be technically savvy, anything of that nature. It's just kind of, for lack of better terminology, this probably isn't the best example, but just kind of like a make it easy button for investing, or at least make it easier. It's never going to be easy, but easier.
And so you've built a relationship with these brokers like Robinhood, Alpaca, or Schwab, or different crypto exchanges, Coinbase and Kraken and Binance. And so how did that happen? How were you able to get them to trust you as a new platform? How were you able to build those relationships?
Yeah, no, that's a really good question, and that's actually something in the early days, that was a little bit of a challenge. So we initially we didn't become an RIA right off the bat. We're an RIA now, but it took us a little while, and we initially started just registered investment advisor. So we're licensed with the SEC and all that good stuff, all that fun stuff. But essentially, that's not how we launched. So we launched kind of in a scrappy way, connecting to your existing accounts, and then basically it would send you signals that you could approve, and then upon approval it would place an order for you. And so we initially built up those connections in a very scrappy, startup-y way. And then initially, E-Trade was actually the first to kind of see this, say, hey, this is kind of cool, and kind of bet on us. So we were fortunate enough to one of the vice presidents of Morgan Stanley came in actually as an investor. He said, this app is really cool. I think this is where the industry's headed. And then all the E-Trade stuff happened. We then just leveraged that to whoever we could. And then as the list built, we would say, okay, not only E-Trade, but also E-Trade and Alpaca, E-Trade and Interactive Brokers and Alpaca. And it became easier the longer that we actually were functioning in the marketplace, and people saw, hey, we're doing things in a compliant way. We have great people on and around the team, and we're really looking to just empower the average individual. Another thing is we're not trying to compete with these brokers directly. It's like if you're we'll just use E-Trade again for an example. We're not trying to take their clients off of E-Trade and move all of the money to the Surmount. It's more so hey, you have this existing account. We all know it's a pain in the butt. Nobody wants to move an account to another. That's just the transfer fees, the process. What ends up happening with your positions. It's a nightmare. So nobody really wants to transfer accounts. This is a way where you can manage all of your investment accounts conveniently using data-driven strategies. It can be a small portion of your account. It can be all of your account. Like, you have ultimate control over that. And then we just, send these trades to these brokers in a compliant way. And actually, at the end of the day, like, our goal with the brokers is to facilitate like a higher lifetime value for their existing clients. Because like, if you're on E-Trade and maybe every once in a while make a trade, but aren't super active, maybe use the app once a quarter, automatically, just by using Surmount and starting a couple of strategies, just that rebalancing will facilitate more volume on your behalf, which at the end of the day, like, makes the brokers happy. So I think it's really just a win-win scenario where users get high value, high quality investment management in a really convenient kind of software driven format. These brokers, which are constantly looking to innovate and constantly looking to adapt to new kind of technology in the marketplace, like, this is a way for them to potentially expand their client base, to make their clients happy with the new software that they didn't previously have, and to kind of, I think, in the next 3 to 5 years, if brokers don't have like spot trading or a third party trading software enabled, I think oftentimes what we'll see is users will probably forego using that broker, maybe at least as much, to use another one that does support them with ultimately what they're going to want to do as a client.
So one of the things we talked about with investing is that you work with the different platforms, but some of the platforms have different sort of structures and rules of things that you can do. So when I've talked to someone who is like, they had a new Roth IRA account, and they were telling me like, okay, I started with Chase, and then now I've moved to this other platform, but I might want to go to Red Bull because they have fractional share trading, and I want to buy fractional shares. So I'm curious, how does that relate with Surmount? Like, do you enable fractional shares, and is it only like you can buy and sell fractional shares, but only through the platforms that have that functionality enabled? Like, and especially since you're sort of kind of, as we discussed, like, we're making our own ETF, our own personal ETF. It's not a real one, but do you, and I want to put $500, like, does that buy fractional shares for me? Like, just curious about this.
Yeah, no. So you kind of hit the nail on the head with it. Ultimately depends on what the broker supports, like whichever broker that you're using, whichever it supports. But in, I'd say, 95 to 90% of cases, we could both be using the same strategy on two different brokers. Mine supports fractionals, yours doesn't. And we can still run the same strategy. It would just, some positions might get handled a little bit differently. Maybe, just position sizing would be a little bit off for, whoever doesn't support fractionals. But ultimately, we would still be able to both use the same strategy. But just to answer that question, quickly, it really just depends on what the broker supports. So what you're already using.
And when I was exploring Surmount, the website, I was just, looking through those different sort of, I guess, pre-made. So my understanding is some of your users, or is it your admin? Like, is it on your team, or is it users that are creating some of these investment vehicles? Like, and one of the ones in particular that I saw was the Tesla short and long EMA, which seemed to have like a really amazing return. It was like 498% return. And so I'm curious about that. Like, are these popular strategies something that someone can come to your platform and start promoting? Like, hey, I have a cool strategy. Or is it a lot of your team making them? And then if you could tell us a little bit more about that Tesla short and long EMA.
Yeah, absolutely. So the Tesla short and long EMA was not, I did not make that. Basically, I guess to answer the first part of who makes them. So it initially started with just us making the strategies. I think for the first year or so, it was just my strategies. And then we expanded that to had a couple more people on the team that were launching strategies. And then have expanded that to where what we're getting into right now, which I'm very excited about, is kind of more creator driven strategies. Initially, it's going to be a little bit more kind of selective, but ultimately, like, we're launching with Moby. They're kind of like they're great kind of Motley Fool style service where they'll pick stocks, and they're exclusively launching investment portfolios on Surmount to basically enable their users to invest in Moby portfolios through Surmount. Doing the same thing with Quiver. So ultimately, I think in the next year and a half, you'll see a lot more public creators, whether that's an investment advisor, whether that's an investment company, et cetera, but people that can share portfolios and strategies, we want to kind of be the platform where they do so. And, obviously to where it benefits them, they can kind of build, a track record, earn some money from doing so, from, promoting their strategies. And then, basically just at the end of the day, if you're a consumer, you just have access to more great investment products that you can really, dive into, learn more about, and determine, are they a good fit for your portfolio? And then kind of that third portion of that Tesla, long short EMA strategy. I went to school with Viraj. Viraj, created the strategy. He interned here for 2 summers. He's great. That was one of his ideas, and that's solely out of UMD, basically one of their student managed investment clubs. So it's been fun to see what people create. And so far, I believe we just crossed the 25,000 mark of custom investment products created on Surmount. So again, just excited to see that infrastructure layer kind of starting to serve people at a larger scale of being able to actually turn any idea that they have into an investment product that's data driven and can really just make their lives easier.
Okay, so the guy who worked for you, who was intern for 2 summers, and he's the one who had the idea, like, I want to make this Tesla long short EMA strategy. So how does he get paid for that? Like, he's published his strategy. He found a strategy he thought was really cool. And then how does he publish it there on Surmount and get paid?
Yeah, so I would have to just confirm with one department internally, but I believe how that works is if you're a public creator that's not registered, we own the IP. Like, we would purchase the strategy from you essentially, and then if you promote it, any basically individual that invests in it because of your promotion, you get paid on that. So you're essentially kind of like a promoter for the strategy, essentially, is my understanding of that. If you are registered, then you can basically just run your investment business on Surmount, whether that's secondarily, primarily. But if I'm an investment advisor that's licensed, I can launch investment portfolios, gain access to indirect AUM, expand on my track record, if not build it from scratch, and basically just charge my whatever fees I'm charging on Surmount.
Okay, so for example, in this case, the creator of the investment strategy can charge a fee. And so how does the fee work? Is it like, here, I want 1% of however much money comes in, or how would the fee possibly work?
Yeah, so if you're if I'm a registered advisor, it would just be that management and or performance fee, depending on the investor's accreditation level. But yeah, I could say 1% for just a arbitrary number, 1% to invest in this strategy, and then if I invest $10,000, the advisor basically just gets paid a percent on it.
Okay. Oh, so like with public ETF, where they might charge a fee of like 0.25 or 0.5 or 1 or whatever the percent is, and those fees are charged based on the transaction, buying and selling, or is it charged like annually? Or
Yep. So it's typically charged annually.
okay, yeah. That's fascinating. So for people who are interested in publishing their strategies and potentially being able to make money on your platform, they can come to Surmount. They can publish their strategies. They can charge an annual fee, for example, and then they can send people to Surmount, and then Surmount handles the transaction of managing the end user's portfolio. So if I want to buy that investment, then I come and I say, oh, I want to connect my Fidelity account. I want to connect my Kraken account, whatever accounts I have, to Surmount. And then Surmount, your tech will automatically manage based on the strategy. So if this, in the example of this Tesla 10 and 50 day EMA, my understanding is that a trade or some sort of a change in the position might happen based on a crossover of the 10-day EMA and the 50-day EMA, and those transactions will happen automatically, or I could set it to where the platform sends me a message and says, hey, here's a suggested trade. What do you think? Do you want to approve this, yes or no?
Yeah. Yeah, so you can do either one. You can make it to where you have to approve each trade, or you can do it to where it just, when it's time to place a trade, it just does that for you automatically.
Yeah. Yeah, this is fascinating. You've set up this whole infrastructure so that who are your ideal partners and customers?
Yeah, so I think, really ideal partners, it'd be exciting to see more investment advisors kind of move over to Surmount and run, a portion of their business for kind of their younger clients on Surmount. I also think it's exciting to, partner with some of the great investment companies, Moby, Quiver, etc. Status. Uh, we have a couple of, just really exciting companies that are doing great stuff in the retail investing space that we're, very proud to be partners with. And then in terms of just end investor, really I think it's, sub 40, sub 45, individual that again just doesn't want to settle for their parents' financial advisor. Maybe this is somebody that's managing an account or two on their own. Maybe they have, a financial advisor but don't want to give them all their money. But this is somebody that kind of wants just that new age, more software driven approach to investment.
And help me understand the part of, so if those end investors that you're talking about, right, and they don't want to work with their parents' financial advisor, why is that? What would be wrong with working with the parents' financial advisor? Are they able to get different options by working directly with the software? Would the financial advisor be steering them away from some potentially lucrative investment? Like what are the reasons they don't want to settle?
Not necessarily. Like, I wouldn't say it's the worst thing in the world to have an advisor. Like, that's still better than what most people are doing. I just think that if you look at the trend, right, like less than 2% of individuals under 45 are actually going to a financial advisor. There seems to be a much bigger interest in terms of, software driven tools, self management tools. And I think that really the difference that you get on Surmount that you don't, with an advisor, like you said, there's a little bit more flexibility. But again, like just going back to the point of unless you've been working with this advisor and just can like 10 out of 10 vet them, know that they're just doing a phenomenal job managing your investments. Oftentimes, like it's a business where you're not going to have a client list of 30, get paid very well. I might work 4 hours a week hypothetically. And I'm not saying that's how every advisor does. Realistically, like if you just look at how the business is structured, they're more incentivized to build and maintain relationships as they are to build, the winningest portfolio that's going to set you up for, early retirement or anything of that nature. And again, I don't want to sit here and badmouth any advisors because there's nothing, necessarily bad to say about them. I just think that there's a growing interest for a new option that is highly personalized, that is, software driven, where you just have that convenience of being able to log in via an app, via a website and get on, view, maybe make a couple of changes, maybe make some allocation revisions all in 5 minutes, as opposed to call somebody up, wait a few minutes. It's a different process. And I think most people that are used to just that faster, more convenient way of doing things, I think will really enjoy just kind of the experience of managing investments on Surmount.
And then also there's business hours to consider, right? Maybe the financial advisor works during the same hours of the day that the client works. And then so when the client is ready to have that conversation, it might be like 11 p.m. at night. It might be 3 in the morning. And you can't really call your advisor during those off business hours.
Yeah, exactly.
So how do you get the data to know that the trend is like 2% of individuals under 45 are the only ones that that we're seeing now, and that trend is down? Like where are you finding your data sources?
I'm not sure where that one in particular went, but that's on my pitch deck, so I could find that. But it did come from somewhere like I don't know, Morningstar or Financial Times. So it was like a reputable source, but I don't want to say the source definitively and then be wrong. So I can get that to you afterwards, and if you want to post that in like a link or something.
And so I noticed that you tell us about when you started the business. Okay, so early days, like now you've built this platform, it's going, it's growing, and it's doing cool things, and you're excited about all the cool things that are happening. But go back in time to the earlier days when you didn't have all the cool partnerships and you didn't have all the customers that you have now, and you were trying to get this thing started. What was
Sure.
that like for you?
It was pretty intense. See, I say intense, but like I would say that really this felt like a project for a very long time. Like this felt like something still feels like something I enjoy doing, but the early days were more so just like, could we build this? Could we make this happen? And if so, like, would somebody use it? And just kind of testing out some hypotheses, some questions that I had, that some other people around the company had. And I think it was just, is this something that could be viable in the marketplace? And I think it happened slow then all at once, right? And we're still just, a small drop in a big bucket, still just getting started. But I think ultimately the early days, when I think back to kind of the first initial kind of 0 to 1, no code, written, and kind of those days, it was just seeing a need for something that didn't exist yet. And the couple of trends that I saw were, one, more investors were shifting towards like, no commission brokerage apps, robo advisory apps. Then they were going to a traditional advisor. And then two, it's like the people that I did know that were working with that kind of supposed to be highly personalized traditional advisor. My grandmother, for example, got charged $16,000 in management fees for a year that they had a down year for. And it's like, something's not right here. So ultimately, it started as a way, I mentioned, I think on this call, of, just trying to help the people around me access some of the, data-driven strategies, portfolios that I was creating. And initially, once we saw that that was possible, that, it was a process that people were actually able to and interested in, going through and completing, we said, how many other people might be, interested in doing the same. A handful of people that were kind of doing, like, we saw a statistic that over 20% of Discord's daily active users are coming for investment groups, where it's basically the same process of like, here's what I want to do. I post it, people see it, they do it. And it's just like, all of that is so manual right now. And I think people are just like, individual investors just seem to have been desperate for an edge. And I think we're, Surmount's not, an investment edge company, but I think ultimately we provide people with the tools, with the software that can provide them with that edge, where they can turn, an idea into an investment edge that they can, share with other people. And I think that's where we're really excited about playing a role in the space, because that's somewhere that, a lot of people have tried to kind of crack the code on, but I think ultimately we just got lucky in terms of when we jumped in, the software around the industry was at a point where, we could build something really exciting. And also, I think just the overall consumer adoption was trending in the right direction. Because, there's Quantopian, like, we're not necessarily the first company to have a similar idea in the space. I just think that what we're doing in terms of the approach that we're taking with consumers and just making it very easy to use, I think that's just something that the Quantopians, the other companies in the space that had built some sort of custom, model ability to, automate portfolios with, they were still just so technical. So I think we're just fortunate to have, I guess, trends with us.
And what makes it easier to use Surmount versus like a Quantopian?
Yeah.
How is it less technical and more customer friendly?
Yeah, absolutely. So like on Quantopian, typically you had to like code everything. I believe that you could use stuff that was basically pre-built, but with Surmount, you can go from idea to automated investing in your, Robinhood account without ever seeing a single line of code. In a process that just feels very organic and very like on trend with what you get with a robo advisor, with what you get with a no commission brokerage. So we wanted to feel familiar, and intuitive, but at the same time, like, very powerful for the consumer.
I mean, when I visit the website, right, it does look very friendly. The UI looks like, how did you go about designing the UI to be so intuitive and feel familiar?
A lot of failing forward, honestly. I still co-lead design. I solely led design for up until probably 6 months ago, 12 months ago, and then kind of we brought somebody that's way better at me in to do it. It's really just kind of figuring out what users want. Our users have changed since we first launched, so just making sure that we're staying on top of, like, who is the ICP, who kind of is ultimately going to be interacting with the other side of this. And then just overall, like, building something that, or kind of with those companies where it's like, kind of build what you want. And if you understand the space and you build something that generally can be valuable to, if nothing else, yourself, there's a chance that other people might might see the same interest. So that's kind of where we started. And then we are obsessive about, talking to users, really understanding like what our customers are interested in. And our product roadmap changes, a week to week to biweekly basis based off of the feedback that we hear from people. So I think largely that's been what has guided us, but also it's just a lot of iteration. I would say a lot of iteration, like a ton of iteration.
And do you track it with some sort of like metrics where you're able to see like, you know what, we're doing less clicks now, but we're getting more results? Like, what kind of system do you have set up to like track all that?
Yeah, so we have a lot of internal analysis, and we're very data informed. We like to always say data driven companies can kind of maybe be blindsided. We want to be data informed in terms of really run the tests, run the experiments that can kind of guide us in terms of testing out hypotheses, testing out, these different ideas that we might have around like how can we do a better job of getting in front of a consumer, in front of making it make sense to them as quickly as possible, and then ultimately just making sure that when they do get into the funnel, that they're met with like a good experience that can solve their problems, that can add some value into their lives. And it's just easy to use. Nobody likes an app these days where it's like you're sitting there scratching your head saying, how the heck do I even use this? So I think at the end of the day, just having some core objectives of we want to be intuitive. We want to, be something that doesn't feel like every single other app that you use. At the same time, we just want to be able to provide that value to people that, ultimately they're coming to us to gain.
And what's your vision for like the next 5 years or however far you can see into the future?
Yeah, so that's a question that always gets me excited. So I think, when I think about Surmount in, 5 years, 7 years, I really want to be the smartest place for any kind of market cycle. When I say that, like one of the big goals since day one has been like automate any investment class across any investment account for any time frame, et cetera. Like we just want to have that flexibility as an investor. And like at first, I'd be lying if we weren't like, all right, let's create a super app. It's like really super apps aren't made overnight. It's like solve a niche of initially help all the people that you want to that are interested in automated investing. Like make an easy way for them to do that, and then add a way for them to save more efficiently, and then add a way for them to access different asset classes. I think ultimately in 5 years from now, the vision that I have that gets me excited is really just stepping into that smartest place for any asset class, for any an objective, and just being a very intuitive, like kind of being the software driven financial advisor. So like you say, what your objective is, you kind of take the 0% to 5%, and then it's like let us handle the rest, make sure that you're happy with the outcome in terms of like the construction of the portfolio, et cetera, and then really just handhold investors all the way, and make it to where investing isn't this difficult intimidating process to where it's just like, okay, I have something that can really align with me and set me up for success. So I think you'll see more asset classes. I think you'll see more functionality. I think it'll, crack in the code on just that natural experience for the consumer to interact with their portfolio and to, make revisions to the portfolio, because it's easy to get set up. I think the challenge is, once you're set up, making sure that it's adjusting with you, making sure that it's, performing well by your expectations, et cetera. So I think that's the harder part that we really want to provide a great customer experience with. But yeah, I feel like I'm rambling, so I'm gonna reel it in a little bit, but I'm excited about the future in short.
And from those early days, right, to where you got here, what was the biggest challenge that you faced so far? And what do you see as the biggest challenge going forward?
I was gonna joke and just say money, but realistically, like we've always been a very capital efficient company. Like I see some startups, and especially coming out of the valley, where they raise 10 million out the gate and spend it in 2 or 3 years. It's like there's like a lot of companies that have had amazing amounts of success doing stuff like that. We've just taken a different approach of like, first let's validate what hypotheses we have before we throw a bunch of money in terms of like getting this on TV ads and everywhere else. It's like let's just make sure we can do a really good job and make the first 1,000, first 100 companies really delighted. Customers really delighted. And I think that's kind of the approach that we took. I think, realistically, if you look at us compared to most of the other companies in the space, they've raised anywhere from 10x more to x more. And I think it really just comes down to be capital efficient, we needed some great engineers in and around the company, which Techstars was hugely helpful in, making that happen. And I think it's just like you only have a couple of shots. We luckily haven't had to iterate or rather pivot the company really significantly. So I think we've been really bullish on this one concept from the early days. We got, a stroke of luck and, brought some great people on and around the company. And I think that's what's allowed us to be so capital efficient. And now we're at a point where it's like, we have thousands of investors that are really happy with the product, that are investing, tens and tens of millions of dollars to the product. Like we're constantly in a position where it's just like we have to pinch ourselves because like people are actually, using what we built. And that's just a very cool feeling and really a privilege. And I think, moving forward, we have the opportunity to, I think, really make a significant impact in terms of like what software driven investing looks like for consumers. And I think, again, if we do a good job and if we continue to uphold, our end, I think in, 5 years, 7 years, 10 years, I think it will be the norm ultimately, because again, it's just not fun to, do the process in any other way. Like there's the no commission brokers, there's the traditional advisors and the no commission and the rather robo advisors. Really in all three, it's just that going back to what we talked about earlier, it's like you're either all chipped in making 100% of the decisions or kind of on the sidelines saying, okay, this looks good. Every once in a while, maybe, make a couple of changes. So I think this is a way for people to really set themselves up for success in terms of approaching public markets and hopefully in the near future, even, maybe even private markets, but just a way to approach investing differently. That is that kind of new unlock in terms of highly bespoke, highly personalized to the individual.
What did you get out of the Techstars experience?
Yeah, Techstars was great. I joke all the time that our managing director, Ryan Cooter, like he's just a legend in Techstars. I think he's the longest acting managing director. He was phenomenal. We had the privilege of, it was during COVID, but, we were all able to basically start off in San Diego and then go to Boulder, Colorado, and then New York. So it was a very fun experience. I had such a great group of people in our Techstars cohort. A lot of the other companies are doing, phenomenally. So it's been very fun to learn from other entrepreneurs of, all different walks of life, all different kind of, backgrounds. And it's also been just, I think, highly motivating because once you get kind of in that room of, 5,000, 6,000, however many applicants, 12 companies were selected. It's like you instantly, one of the first interesting things was the first day, I believe we were all in person. Somebody was like, I have insane imposter syndrome. And everybody else in the room was like, me too. Like, why are we here? So I think it was a huge lesson in terms of like everybody, no matter where you are, no matter what stage you're at, like everybody gets nervous. Everybody deals with the same stuff inside their head. And I think it was a really exciting process to kind of break out of our shell a little bit and be like, at the end of the day, there's only a couple things that matter in terms of building a company. It's like driving value to the user. It's like maintaining ethics because there are big companies that aren't ethical, and it's like you don't really look up to that. So it's like be a company at every stage that you really look up to that can actually like delight your customer and just have a good time doing it. So our Techstars cohort was great. I can't speak highly enough about Techstars. They've been a part of our process since graduating. They're still involved with Surmount. So ultimately just cannot speak highly enough about Techstars. It was a great experience. We got a lot out of it. And I think just those class sizes are second to none, right? Like there's 12 companies. They bring in mentors specifically for you, companies specifically for you. And it's just at that stage where we were not only as, a company, but also where I was as an entrepreneur, I think it was just the perfect experience. It really helped in every way so much.
What are like your top most impactful things you learned from other entrepreneurs in Techstars?
Yeah, I would say number one would probably just be like that imposter syndrome concept. I was in New York last week. I go back tomorrow, but I did a panel last week, and it was the first time where I haven't like been about to public speak, and my heart's not like pounding through my chest. I think I've done a fair amount of public speaking. I wouldn't say a lot. There are some people that actually do it quite a lot, and I think, man, like it's so helpful to just kind of have in the back of your head of like, all right, every other person on the stage or that has been on the stage, depending on the context of the event, probably also was or is to some extent nervous. It's like just get up there, go with the flow. There's really at the end of the day, like there's not that much pressure on anything in life. It's like if you do a great job for somebody, they're gonna remember it. If you do a horrible job for somebody, they're probably not going to remember it by the time they eat dinner that night. At the end of the day, just take the pressure off, have a good time, like go up there, say what you know you got to say. And I think that has been the biggest um, realization. And a lot of that stems back from just conversations that I've had with, Techstars folks about, them going through a similar experience, everybody always, having, imposter syndrome, etc. I also think it's just like the feedback points and like information points that you get like fundraising or that you get trying to get your first 10 customers, like there's so many problems and kind of just challenges that you go through if you're whether a first time entrepreneur or 10th time entrepreneur, that everybody just it's kind of like the rite of passage. It's just like you can be a billionaire and still go through these same exact troubles in terms of trying to build a company. So I think it's an interesting process, and I think there really is to some extent kind of a formula for it. And I think for us, it's just been that's been a big realization in terms of you know I talk with companies that are 800 million, $1 billion plus in valuation, and they're going through like the same employee things that like we are. They're going through like the same build issues. I don't know. It's just like you can zoom out. Every company basically just experiences very similar, if not the same exact issues at every stage. So I think the more you can actually interact with entrepreneurs, talk with them, kind of get that experience share, like you can really start to kind of avoid landmines and like just learn a ton about the space, a ton about building businesses, that maybe you wouldn't have had if you're just in the middle of a cornfield, not really interact with other entrepreneurs, which is how I started my kind of startup journey. So I think I don't know if that was a sideways answer, but basically just the more you can actually go out and interact with people, you just learn so much.
What are some of those big landmines that you learned to avoid by talking to entrepreneurs?
That's a good question. I would say, I don't know, like I would say just going back to like some of the soft skills that you learn, right? Like if you're on a sales call, it's just like how do you actually talk about the products? Like if I was trying to sell you something, I don't get on and like, all right, I'm gonna talk bad about everybody else. I'm gonna talk only good about me. I'm gonna just like I don't know, you just learn how to interact with people, how to interact with companies, how to, market. And I think ultimately almost all of it can just I don't want to sound too hippy dippy here, but almost all of it can just like be channeled back to like getting down to the human element of anything. Like at the end of the day, like we overcomplicate things systematically with everything that we do. So the more that you can actually say, all right, like what do I need to do here? What is the end goal here? How have others done this in the past? Like you can kind of have a blueprint for how to build a product, how to build a company, etc. And I think that can be really impactful for, again, just any stage of company.
So yeah, so help me break down that blueprint. So you mentioned, right, you've learned a lot about the sales, you've learned a lot about the marketing and bringing it back to, like this high ethical, customer focused, where you're giving them the outcomes of, delight. Not only are they enjoying it, but then also you're enjoying it. So how does that? So tell me just a little bit, like for our listeners and the viewers, like what are some of those takeaways that they could learn for like marketing or and how can they be authentic in these actions? Maybe they've never done these actions before,
Yeah,
but they want
yeah.
to approach it with an authenticity, which is what I'm hearing from you. How can they do that?
Yeah, I think it's really just comes down to being yourself, right? Like I don't hop on like if I'm doing a product video or a demo or anything of that nature, like I don't hop on and try to pretend I'm anybody else. Like at the end of the day, like people can see right through if you're putting on kind of a mask. And I think authenticity, if you can be yourself and even if I was to go out and, be totally myself with, kind of the investment management space. There would be some people that just resonate with how I talk, how I think about, markets, how I think about portfolio management, that might just resonate. Like, I don't know. I think oftentimes we're just in this content driven economy at this point where the companies that can actually build a brand that can resonate with customers, that can, or even just individuals that can build a brand that can, resonate with others. Like, I think they just have such an unfair disadvantage against those who don't. So I think really it all just comes down to, it's going to sound kind of off the shelf, kind of just, easy answer-ish, but it really just comes down to being yourself. Like, just be you. Don't act like you're anybody else. There will be a large portion of people that resonate with just that, and the people that don't. Like, I'm not going to do well with, 70-year-old investors who still want to, fax it, get a fax of their quarterly report. Like, that's not my market. I'm going to do very well with the people that kind of are looking for like the software driven approach. I think it's first just understanding you're not going to get everybody. The people that you do get, just make sure that you're doing a 10 out of 10 job for them and making it so good. One of my favorite quotes is, if you do a great job for people, they're going to tell maybe a couple of folks. If you do a bad job for people, they're going to tell everybody that they know. And they're going to spit fire on your name. So it's really just like try to delight people. Try to just get those couple of organic referrals just by making somebody's day easier, more valuable, whatever it is that you're doing, selling, whatever it is. Just do it great.
Yeah. Okay, so we start talking with your business, but also we want to see a little more about you. We want to help people who are consuming this content to know like a more 360-degree view of your life. So we are all sitting at desks all day, Logan. Like, how do you keep your energy? Like, what do you do for your fitness or for your health to keep you like doing what you're doing?
Yeah. I mean, for energy, I do have two cheat codes. I have not only a coffee, but also a Red Bull sitting right by me. So that's pretty common. I work out a lot. I'm big on health. Like, I think if you're not healthy, you're not going to have the same energy. So I eat very clean. I've eaten, I'm on a very high protein diet. So I've eaten a steak a day for probably the past 6 years, maybe a little bit longer. I work out a lot, lift weights, submission wrestling, boxing, running, bicycling. Like, I think being active is one of the best things you can be. And that also just like does wonders for your brain. Like, not only do you have lower like stress levels, when something bad does happen, you can actually say, all right, take a breath here. It's not the end of the world. Like, man, if I'm living not well, maybe I have a different approach to that. So I think for me, just living clean, doing what I need to do based on the standards that I know I've set for myself, whether that's eating, whether that's working out, like, especially on the days where you don't feel like it, just like it builds character. Like, all of that stuff immediately flows into everything else in your life. Like, if I'm the type of person that when I run a mile, I, oftentimes, than not keep going or whatever it is, just like pushing yourself harder. Like, that will directly translate into anything entrepreneurial, anything, personal, professional. Like, I think all that just bleeds into each other. Then in terms of just like the rest of my personal life, much of it is consumed with Surmount. So I have not much of a personal life, but I'm a huge family guy. Like, I've lived in San Francisco, I've lived in New York. I'm back on the East Coast for the most part, because my family's here. Parents are getting older, grandparents are getting older. So, I spend a lot of time with family pretty much every weekend, in Maryland with some family. I do a lot of fishing. My dad is a captain, so he does. I was just tuna fishing, a lot of like striped bass, so rockfish, especially where we are in Maryland. Like, you can't ask for better fish. Go down to Costa Rica, go down to Florida, once a year, once every 2 years or so. Try to get like a week fishing trip in. So that's something that we've done for ages. My grandfather was that way. My great grandfather was that way. So very much outdoorsy type family. And then I don't know, I always like to be doing something, right? Like, I just went through a wear and carry pistol course just because it was like something to do, something to learn. So it's like I'm interested in like getting my pilot's license. Like, I just like to learn new stuff. And oftentimes than not, if I can actually like apply that to life, I don't know if that makes sense, but like the pilot's license is kind of where I'm thinking of in terms of that. Like, I tend to have a strong interest in things that are not only, new learnings, but also can actually create like a tangible impact in my life. And yeah, I would say the rest is kind of just everything else. It's just Surmount. It's just, trying to stay active, trying to, get out live life, get some air, touch some grass. But yeah, I feel like this is going to be one of the more boring answers, just because I don't have too much. But I say I don't have too much, but I don't know. Some stuff will come up, like if I can go and see a concert, I'll do it. But it's definitely like I don't have a very structured like social routine or anything.
So you've been eating a steak a day for 6 years.
Yeah, yeah.
So
High protein diet.
yeah, that's what I see, right? The benefit is high protein. You're going to keep your muscle mass. And then if you're doing the gym, that's going to help you keep your bone density as well. Have you noticed any negative consequences or side effects from eating a steak a day?
No, I don't think so. I get asked it all the time. I have a thesis that it's not necessarily a steak that gets you. If you look at their studies, I think a lot of them are from like prior to like the 80s. Like I know there was a couple in the 60s, the 70s. Like I think oftentimes one thing that we weren't taking into account in terms of just like the I guess the groups, control and variable groups in which we ran those tests around were like oftentimes red meat was considered as like this kind of like savory, like this almost reward type food. So people would have it like maybe with a drink, maybe with like, I think there were a lot more things that didn't get measured in those groups, especially when people were like high smokers, all that. I don't think red meat is bad for you. And I'm obviously more of a mathematician and interested in markets than this. I do not spend time researching is red meat bad for you. But my suspicion, just based off of my experience, is I think it's more so like all the salt that you put on your steak. I think that can get you more than anything. But no, like I feel great. I'm in great shape. Steak, chicken, fish. Some greens. I've been. I feel on top of the world. So
You cook this yourself, or do you get this at restaurants? Like, how are you getting your high protein diet?
yeah. So if I'm home, I grill it. If I'm traveling, I'll just put it in the 400.
So you pre-grill it, and then you take it on the plane. Like, how do
No, no,
you?
no, 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 no. If I'm home, I grill it. If I'm traveling, instead of grilling it, I'll just put it in the oven.
So like at a hotel.
Sure, yeah. Like wherever I'm staying, hotel, Airbnb, etc.
Wait, walk me through this. So you go to the hotel like restaurant and you say, I've got this steak and I want you to grill it for me, or you have like a
No, I don't travel with it. No, I don't travel with it. I'll just like if I'm in Florida, I will find some steak from probably a grocery store. If I can cook it, I will. If not, then I'll get it from order it or something of that nature. But oftentimes, especially nowadays when you travel, you'll have like a you know you know little oven or something of that nature, toaster oven at least.
well, yeah, you could have maybe you can have some sort of oven that you bring to the room. I see. So you so I think we skipped over the part like where how are you sourcing your meat? Like what do you use to understand to for us to understand like what do you how do you want to source your meat?
Yeah, I mean, I just super simple. I just go to the grocery store. But I grew up right next to the PA line in Maryland, so like there's basically another way of saying I grew up in the middle of a cornfield. So I know they have like some half cow, quarter cow type things, type offers around where I grew up. I have never done that yet, but I'm sure it's as much as I eat, probably a better deal and a smarter fiscal decision to buy it like that. Right now, I just go to the grocery store, get some chuck roast, something of that nature, and just go ahead and make that.
Okay, so chuck roast and it looks like a steak. You put it in the toaster for like how long do you cook this thing?
I'm not sure. I guess if it's on 400, probably like 25, maybe 30 minutes.
Okay. So while you're cooking, presumably you're thinking about the business. You're like, okay, I want to do this thing next. I want to do that thing next.
Yeah.
Like, what's your life like when you're outside, and you're cooking your food? Like, what are you thinking about? You listen to podcasts?
Yeah, I listen to a lot of podcasts, a lot of music, but definitely a lot of podcasts. I don't know. Depending on the day, I might be thinking about work. I might be thinking about you know something in my personal life. Most of the time, it's probably going to be work. But I guess that just changes as the seasons and as kind of the tides of life change.
What's your favorite podcast?
JRE, just because like the range of what you can get, I could listen to like something solely focused on MMA. I could listen to something diving extremely deep into like you know gene sequencing. I think just the range there. I would say Joe Rogan Experience There's also a couple others. I just listened to one. I don't know who it was, but it was with Matthew McConaughey. I thought that one was pretty good. I never listened to him like long form speak. But I think JRE, like you can get great startup folks like Mark Andreessen. He's done like I think just the quality of content that you get over there is good. Also, Lex Friedman podcast is another good one in terms of just that same type of range.
Yeah, I listen to all those too. They're all terrific. And
Nice.
I agree. You get to go deep on a subject that is fascinating,
Yeah.
and it's a wide range.
Yeah.
Yeah, that's what I feel like is special about this podcast as well, is that we get to see who you are, not just about the things that you're really good at talking about, which is going to be, we
Yeah.
start with that to sort of lure you in. And then we want to get the rest of that 360 degree of range. And Logan, everybody struggles when they start getting off that subject. They're like, wait, I have words. This is a thing. What are the words that I have for fitness?
Yeah. Yeah.
It's really cool to see, because actually people have some really cool insights.
Yeah.
Like, how would I have ever known that you eat steak every day? How did you get that idea? Were you like watching Conor McGregor and you're like, that guy eats steak, I'm eating steak?
No, I think it just happened. I think initially it was just like, subconscious, probably just had steak for like a week or two straight. And then I was like, oh, that's kind of interesting. I feel good. I don't know. But in high school and college, I did compete a lot in like submission wrestling and a little bit of boxing. So I was just like super into being a fitness nut then.
What's submission wrestling?
Like, I don't know, wrestling, instead of just going for pins, you're going for like submissions as well. So like chokes and whatnot. So like jujitsu, essentially, like no-gi jujitsu.
So that's a thing you have in common with Joe Rogan.
He would whoop me, but yeah, I think he's like a black belt in some black belt in jiu-jitsu, black belt in Muay Thai. So he's been doing it for decades.
How do you find the time? So I think a lot of people, if they're really focused on their business, obviously this is your baby. This is something that you spend all kinds of time on. How do you find the time then to go and do sports, to do the activities that you know you have to do so that you can keep the energy to keep putting energy into your business? How do you find the time for that? How do you make the time in your schedule?
Yeah, every once in a while, like you can have kind of the shutters come on, and you get so just hyper focused on the company. And I used to revel in doing that. I think actually it's depending on where the company's at. If everything's doing great, then oftentimes like that might be a time where maybe you just pull back a little bit, make sure you maintain clarity. I don't know. I think at the end of the day, like you can make time for the things that you value, right? Like it's to go and see family each weekend. It's like that's a 4-hour drive up and back, but at the same time, it's like what else am I going to do, right? Like there's not really like if that's what you decide that you want to do, and if that's what you decide like is a value in your life, like you just make time to do it. So I would say that's just my mentality on that.
Yeah. So culture is everything in the company,
Sure.
right?
Yeah.
And if the culture doesn't allow for something, like if you had created a company where you made it so that the culture didn't allow for you to take that 4-hour drive to go visit family, and didn't allow for you to take the time to cook your steak and listen to a little bit of Joe Rogan in the evening, right? What would that look like? What would the mistake be there that would make that culture where you're sure to burn out? And then how did you do the opposite of that in your company to make the culture so that you can have that time?
Well, I appreciate the kind words of basically saying that we have a good culture because we don't do that. We have not always done that. Like I definitely ran run it on 8,000 RPMs until it crashes. I think that's one thing that especially in the early days and especially as first time founders, many people do. I certainly did it. We joked this year that like this is the first time people have actually taken vacations that we've seen. So like I don't know, back when we kind of considered it just a project, when we were still just getting like the data and execution layers just built out, I still am kind of known for like not taking time off, like being 7 days a week, being, crazy hours. But at the same time, like I think one of the things I found was I was unintentionally kind of pushing that on everybody else. Like that's not what I expected everybody else to do, but I think they just saw that, oh hey, this is what we kind of do here. Again, I think to some extent that's fine in the early days. I don't want to be one of those like Gary Vee people where it's like you can only win through sacrifice, but like I do think that a lot of that is true actually. I just think like going from 0 to 1 is the most intense, sane thing ever. Like you have to take something that does not exist from your idea and have to communicate that with others, and then you all have to, depending on the size of the team, all have to basically turn that into something that is now commercially viable. And just the process of doing that is so intense, and you can obviously cut the workload down a little bit with like AI and templates and whatnot, everything that exists these days. But it's still a slog. So I would say that once I burned out for probably the 18th time, 19th time, you go through these like little micro burnouts. You kind of just say, all right, company's built, product is built. It's time to focus on basically being as consistent as possible. And I think that's still on my LinkedIn of just like, I want to be the most consistent person in the room. Because I found that there's just such a superpower in that, as opposed to being somebody who just like sprints for a week, has to take like a day to like recover, basically. Sprints for a week and has to take like a day. And then just like the process of doing that, you start to essentially create these basically just stress fractures in your character and like in who you are. And you just like it can be intense. And you see on Reddit like people are just like, this is not what I thought being an entrepreneur was going to be. I think I've made all the mistakes multiple times to the point where I was able to learn from a couple of them, maybe correct course on a few, and make sure that overall, as a team, we're not losing our sanity and can get what we want to get done both professionally and personally. So I think just having that in mind has been a big change in terms of Surmount over the past year since we've launched publicly.
So what did it look like? How did you know internally, like, or externally, like, this is too much. I'm now having a micro burnout. I need to dial it back.
Yeah. I don't know. I think you just kind of feel it. Like maybe you're not as excited. Maybe you just like are significantly more tired. I think it can kind of show its head in multiple ways. Like the company can be absolutely killing it. That doesn't mean that, you're well rested and in a great place. So I think just not getting wrapped up in the excitement of everything is a skill for entrepreneurs. And then I have to run to the bathroom really quick. Can I? All right. All right. I'll be right back. All right. Sorry about that. That's the downside of all the caffeine here.
Yeah. So what are your family goals?
That's a good question. I don't know. Like I'm very involved with family. I don't have, any plans, having my own family quite yet. And I'm still 25, just getting started. But I think just in terms of seeing my parents, seeing my grandparents, seeing my sister to the extent that I can. She's still in California. I think it's really important to be active in terms of being, an active family member. I try to see them as much as possible. I would not be upset at all if I saw my family every weekend, and like that's just how I spend my weekends. That's just like I'm not somebody who goes out and parties. I'm relatively easy to entertain. But like I think being around my family, seeing family often, is something that keeps me sane as an entrepreneur, and it's also just like it feels right. It feels like that's what I'm supposed to be doing. Also, it's just like I enjoy being around my family. I guess it would be a different story. Like I know there are some people that like maybe don't have the best situations. I am extremely fortunate with my family. I don't have a big family, but I have a small, very close knit family that would do anything for each other. So lucky to have them, and I think there are always sounding boards for is this idea crazy? Am I crazy for doing X, Y, Z? And I think it's just like it's great to have sounding boards to bounce business, personal, anything off of. And I think it keeps you honest. It keeps you humble, which I think is good. And yeah, I mean, there's just what's better than family. They're the one group of people that you can, without a doubt, trust.
Absolutely. What do you do? Like, what kind of activities do you do? You mentioned you're easy to entertain. like with your family? Like what's a nice time with your family look like?
Yes, so my dad and I watch a lot of UFC. My grandma and I play a lot of cards. That lady's a card shark. She will never like play for money. But when I'm back in Maryland, basically every Saturday is for Pinochle and Rummy 500. I'm with her and her two best friends, Wayne and Doris, and played a lot of cards with Barb, going on a lot of walks with Barb. My mom's cool. My mom's into live music. Like, I don't know. I'm kind of like, there's a small portion of me within each of them. So, like, love live music. My mom is always listening to live music. She's always, learning, reading. My dad is always outside as much as he can be, fishing, also learning, also reading. And I think both my grandmas are just firecrackers. One is like, you know, very sassy, little, like, probably 4 foot tall, you know, Canadian woman who has the worst road rage you will ever see in your life. You'd think this little, probably 60-pound old lady is going to jump out and beat you up. So I don't know. It's just like with each of them, we kind of have our own things. My sister and I travel a decent bit together. My mom, we always get something to get into. My dad and I are extremely close, always together. Pretty much every weekend we're either fishing or watching UFC. And then my grandma is play a lot of cards with her, take care of her in her kind of getting an older age. Yeah, I really, again, this is going to be a boring answer because I'm kind of talking in circles here, trying to think of like, well, you do this or you do that. It's really just like, we just kind of get around each other, maybe go out to dinner, but for the most part, it's like we don't really do that much. I'm relatively that's what I say when in terms of I'm easy to entertain. I do not have an exciting personal life.
It sounds pretty cool, actually. It sounds like you have like a lot of like one-on-one or like small group activities that you can do that are varied, like with each family member. And so you guys can couple up on a lot of these things and have fun. And it sounds like you're the person they can couple up with in a lot of these situations. Your dad likes to watch UFC, but I didn't hear that any of the other family members loves watching that besides you. So it seems like you might be like the grounding property, or you might be like the one who gets to connect with each of them in a deep way and meaningful way.
That's a very nice thought. I hope that that's true to an extent.
That's really cool. So you said you go down to Costa Rica.
Yeah.
What's that like? You're driving a boat together? You're piloting a boat?
Oh yeah. So my dad's a captain. He wanted to be a kind of fishing captain since he was 16 and retired a couple of years ago. That's the first thing he did was got his captain's license, and so he's all over the place. Costa Rica, Ocean City, Maryland, Virgin Islands. Like, he does a lot of fishing tournaments and gets invited to a lot of fishing tournaments because he's a really good mate on a boat. So Costa Rica is like, he's been looking for a cheap little spot down there, but I don't think he has one yet. I think it's pretty much just going to be like a little fishing trip. But we'll go, bill fishing, catch some sailfish, catch some marlin, maybe some mahi, some tuna. So it's always fun. It's beautiful, beautiful, beautiful country. So it's always nice down there, and they really respect the wildlife. Like, you can't even bring a marlin out of the water. Always like that, just because kind of the gamesmanship is always nice. You don't like to go somewhere where it's they don't really take as good care.
So you have to put the fish back in the water.
Yeah, I mean, you can keep some, but yeah, for the marlin, for example, like you don't really eat that.
That's not a fish that people eat.
No, I mean, people eat swordfish, and if you can eat marlin, like in the White Marlin Open in the every year Ocean City, Maryland does a big fishing tournament. And this year I was down there, and you can eat them. There's people where they'll bring in a 800-pound marlin for the weigh-in, and then they'll cut it up and give it to the food bank. So you can, and I don't think I've had marlin, but I would suspect it's kind of similar to like swordfish, but it's just not common unless you're keeping them for a tournament.
And what do you do for fun, Logan? Like, what's your idea of a great time? So I hear like all the cool things that you can do with your family for fun. But what about for you? What's your like best hobby, the most fun that you have?
It would probably be submission wrestling and poker. So I'm big on poker. I play in the World Series of Poker. See, that's always like a minor flex to say I play in the World Series of Poker every year, but like, realistically, I've not played in the main event. Like, I'm playing like very low stakes comparatively speaking. So Big on poker. I like the decision making. I like kind of brain games. I like puzzles. But especially if I'm in like San Francisco or something where there's, casino pretty readily available. We'll typically have like a team trip or something to, play poker for a few hours, not infrequently.
If I'm on the team and I'm the worst member of the team,
Yeah.
right, in poker, right, I might be great at my role at the company, but I'm terrible at poker. How would you help me, Logan, to become better at poker? What do I need to focus on?
Yeah, just kind of tips and tricks. So like you first would be understanding what your ranges are, thinking about like how to construct somebody else's range.
What's a range?
So it's like the potential hands that you could be slash should be playing, and then what you think basically somebody else has. So at any given time, like poker's a relatively, I wouldn't say simple. Poker can get complex, but like at its most basic elements, it's a relatively simple game. It's like, what do I have? How does this fare against like all of the combinations of hands that could exist based on the information I have accessible? What do I think my opponent could have? And like, if you're just starting off, that second portion seems so complex. It's like, oh my gosh, how would I possibly know what my opponent could have? But like, once you've been playing for a while, it's almost like chess, right? Like chess lines. Like if I'm playing, you know, the Dutch opening, for example, like you're going to expect me to make a certain set of moves, and if I deviate from that on move 4, you're going to say this is kind of a weird variant. Whereas like if I'm playing poker for $1,000, $2,000, pot, it's going to be strange. It's going to be a weird situation if I'm in there with aces betting heavily and a 7-9 off is calling. Like I don't know. It's just like it becomes possible to consider what potential hand does my opponent have, just based off of how they're playing overall, how they played pre-flop, how they played, once the cards came out, how they played, once, the fourth card comes out, etc. Like you can just kind of start to generate some sort of information. And sometimes you're right, and sometimes you're completely wrong. Poker's fun because it's there's a lot of overlap. I see traders always talking about how there's so much overlap with trading in poker. A lot of modern day like quant funds. I think Susquehanna actually sponsors some of their traders to basically play in the World Series of Poker. So it's interesting. Like I think there's a lot of overlap there. It's a thinking game. You're not playing against the house. So I enjoy poker. It's fun, and especially growing up in a cornfield, there's not too much to do other than the occasional game of cards.
So like you could have a product on your platform, Surmount, where people could invest in, something that tracks like high performing poker players as the CEOs or the C-suite.
That could be a really interesting idea. There was this guy, Levels, I don't know his actual name, but Levels.io on Twitter, who made something of like CEOs who work out, and it actually outperformed the benchmark. So that could be interesting. That could be really interesting, actually. It's like the CEOs who play in the World Series of Poker, something of that nature, tying it back into like strategic thing. I don't know. That could be interesting. Like is something that I'm probably going to build on the next day or two. Now that you say that, and see, There we go. So that could be interesting. But that's a prime example, right? Like you can turn any idea into an investment strategy portfolio that could hypothetically, help you to invest better.
Yeah. So what do you think that you would see in those high performing poker players or CEOs who play in the World Series of Poker? What do you think would be the advantage that they might have in their approach to business?
Well, I think some of the advantages overlap. Like if you're a high performing CEO, like you're going to have to be able to make quick decisions, quick, potentially pretty significant decisions based on a relatively limited amount of information. So I think that's a soft skill a soft skill that overlaps. I think also there's like a human psychology element to where like if you can get decent at reading people, especially in like the smaller stakes games, you could become, you could not have a job if you can read people well enough. You can just do that for a living, play poker, and there's a lot of people that do. So I think I think there's a lot of overlap to answer the question probably differently than maybe initially anticipated. I think there's a lot of overlap between skills. I wouldn't know that you know, if you're a high performing CEO, there's a guarantee you're going to go in with, X skill, Y% on average better. Like, I'm not sure that that exists. I'm sure it does. I just don't have that information. But I would say that there's a lot of information, a lot of skills that overlap between, the sport of poker and the sport of running a company.
But it feels like a good idea, right? Because they're reading the game, and then they're playing the game better, and it's a high strategy game and a game of being aware of their market in the business sense versus the room in the poker sense.
Sure. Yeah.
It's interesting. Okay, lightning round.
Sure.
Logan, what is the best investment you've ever made for your financial health?
For my financial health, some of my best investments to date are Tesla, since like 2016 or 17. AUR, I really like this company, AUR. This company, Aurora Innovation, when we spoke at Carnegie Mellon University, probably a year and a half ago, 2 years ago, about AI, ML, and finance, there's this awesome company there, AUR. I was interested in kind of the autonomous trucking space, and they're doing awesome work. I think that they could end up being very large. One of my best investments to date, I didn't play correctly. It was Rolls Royce. I'm like 500% gains on Rolls Royce, but my position is so much smaller than when I initially opened it. So had I never touched it, that would have been one of those ones where, you know, you're sitting pretty. But I don't know. I would say each one's a little bit different, right? Like I have some that, like, I went pretty heavy on Argentinian companies a year ago, 9 months ago, and they're up like 100%, like 70% to 100%, and then their dividend is like 8 to 10%. So those have fared beautifully. But I don't know, like I really just enjoy the process overall. Like I get such a thrill. Like it's the biggest dopamine hit in the world to like be right, like do a bunch of research and then be right. That is like the best thing ever. Research something, spot a trend, spot an unfair advantage, whatever it is. Invest in a company for reason X. Put your money where your mouth is. Put some risk into it, and it works out. Like that is a great feeling. But it also comes with not great feelings of like, well, if I had only done this, and there's the ones you gotta tune out. But I really just enjoy the process overall. I think investing is a good, just even if you're not investing with real money, it's good mental exercise and just good learning experiment to think about like why companies do or don't work in their industry. And like, I don't know, just determining some, self-determined probability of like, what is the likelihood this company ends up returning 10x in 10 years or something of that nature. Like, I don't know. It's just like, it's a really rewarding thing to understand how to look into a company. And then once you can do that to a large extent, you can really have some fun in terms of, say you have $100,000 in cash or you inherit, 100,000, whatever happens. If you feel confident in your ability to either A, find somebody or something like Surmount that could help you manage that, or B, if a superstar and can do that yourself, it's a great feeling. But again, that's really not for everybody. But I would say it's just overall a very enjoyable process because you get to learn about induction motors and gene sequencing, and like you can learn about all of these different things that have absolutely zero correlation or oftentimes very low correlation between each other. And it's a fun way. Like that's why, I'm not ready to be one yet, maybe ever, but like that's why being like a venture capitalist or something of that nature, like those people that like for a living just look into companies and can kind of like ask themselves a bunch of questions and see if they can come up with answers. Like that's for me at least, and how my brain works. It's just so much fun. That's long-winded answer about that.
How would someone listening to this, how would someone get started knowing how to look into a company in terms of determining whether they're investment worthy?
Yeah, I would say getting started, like if you're going from 0 to, we'll just say 0 to 10 on a scale of 100, I would say just like understanding at its core what metrics drive a company's success. and what metrics like drive a company's valuation is really like synonymous with success. Like you to be completely clear on what we're talking about, like drive a company's valuation. It's like, how does this company make money? You know, is that increasing or decreasing? What do their competitors look like? You know, what are their fair and unfair advantages? Like just it's really just none of it requires, you know, uh, you know, trigonometry or anything of that nature. Like oftentimes I think investing just gets this highly overcomplicated uh, perception just because sure there are people like Jamie Dimon that are tracking like, you know, every macro and micro parameter there is to track, right? But for the vast majority of people, Peter Lynch is my favorite investor, and Peter Lynch would say like really people don't understand how much of an edge they actually have. Like if you're working in healthcare, if you're a nurse or something of that nature, and notice that like, oh, okay, every patient that we take in somehow interacts with company X, like that could be an unfair advantage. I don't know. Like I think if you listen to the greats, like the Peter Lynch's, the Warren Buffett's, the Ben Graham's, um, oftentimes like the way that they think about and approach markets is a lot simpler than I feel like when you hear the word investing, having never invested or anything of that nature, like you think, oh man, it's like it's this whole world of like you need to do all these equations, all that. Like it's at the end of the day, like it can be as simple as you want it to be. And again, I'm gonna reference Peter Lynch here, but he said something along the lines of, I don't think this is a direct quote, but something along the lines of like, if you spend 14 minutes a year on economics, you've wasted 12 minutes. I don't fully agree with that, but I agree with the premise of like so many people overcomplicate it. So many people spend so much time trying to look at charts and, at the end of the day, find good companies that are growing, invest in them. It's really, if that, it could be as simple as you want it to be.
Nice. What's been your best investment for fitness?
For fitness, probably, I don't know, Planet Fitness membership, although I have a home gym now, or like for me, like MMA gym membership, go in, train Muay Thai, train submission wrestling, maybe do both. If you're, training with a good partner that you respect, that you can trust. But I don't know, like something, anything. That could be tennis. That could be bowling. Like it just moving. I think that's the biggest thing, just moving. My one grandma that I've referenced a couple times on this call, Barb, like she is constantly moving, still does yoga, still goes to the pool every day. Like I think that's the biggest thing is just staying active. You don't have to be, a triathlete, but just doing what you need to do for everybody. That's pretty much, getting some sort of exercise in.
And your best investment for family?
It's a good question too. My best investment for family. I don't know. Cell phone coverage, I guess. That way, when I'm not in town, I can still talk to them. I FaceTime my grandma a lot, my mom a lot, call my dad a lot. So I'd say just the ability to, even when I'm not around them, still interact with them, still hop on a call, hop on a FaceTime. That's probably a big one.
What do you think everybody gets from that when you're calling them, when you're talking to them on FaceTime, and they can see your face and they can hear your voice? What's everybody getting out of that?
Yeah, I mean, I think there's just I'm big on, for example, like in our team, if we can get in person, I would love to. Like I'm big on just that camaraderie and like what's one thing better than texting? Phone call. What's one thing better than phone call? FaceTime. What's one thing better than FaceTime? Actually being able to see somebody in person. So I think just the closer that you can get to just that human to human interaction, I'm a sucker for that. Like it makes a genuine impact in my life, in my focus, in my happiness. I would say that we're social beings. We're definitely social creatures. I think feeding that flame, because if you don't, then you just get sad.
And your best investment for fun?
For fun, probably my PRS. I've wanted this guitar, a certain Paul Reed Smith, semi-hollow cut, since I was in middle school. And I finally suckered up and got it last year. And that is like, I can just look at that guitar and just not even play it and have a good time looking at it. That's up there for sure. Also, I think just any travel that you can do. Like I'm leaving the country for the first time in the end of next month. into early January. Just referencing earlier how like we were joking about how we never really took vacations. This is my first vacation in the history of the company. I'm still probably, my team's joking with me that I'm still probably going to be online, but but I'm excited to travel. I think I'm just getting into the years where I can start to see the world a little bit, and I think there's a lot of understanding just about yourself, just about how things work overall that you get from traveling. That the people that I've met that are well traveled, well read, they just carry themselves differently. Hoping to kind of understand uh, that kind of flex in life of being able to have said, "Oh, I've been there." So I would say that that's one thing that I'm really excited about.
What are some of the places you want to travel to?
Japan. I'm going to Japan in May. I'm going to France and Italy. I'd like to go to Switzerland. I'd like to go to China. I feel like not the only people that I know that go to China are like heavy in engineering, and everybody that I've got that I know that's gone has been like, it's beautiful, like it's lovely, you should go. So I'd like to see China. I think just being able to see some of the just you know hundreds of years old, like just some of the things that you can see in the longer standing, I guess, outdate our country as a whole. So I think as a I think history is interesting. I think being somewhere and thinking how many people have seen this, or how many people like, or what must it have been like when this first I don't know. I think those are fun questions to ask yourself when you travel and see new things. Yeah, I would say all over. I'd like to see Singapore. I'd also like to see Singapore's airport. I could start with just seeing Singapore's airport and going through Singapore, but I don't know. I just we live in this weird generation where it's like I've seen so much of the world through my phone, and it's like I'd like to see it in person as well. So
Absolutely. Yeah. Who should I interview next?
who should you? That's a great question. There's a couple of people in my network that I'll definitely make introductions to. A couple of really interesting entrepreneurs. I'll reach out to them, but definitely make a couple of introductions for you. There's a couple of really like far more impressive than I am in my network. So happy to make introductions there. Kind of get their stories heard as well. And yeah, I hope that I've added some value to this conversation.
Absolutely. And I really do want to join Surmount, and I'd like to build that that what do you call it? A bot or a product or something?
Yeah, just investment portfolio, investment strategy, whichever. Like you can basically make it to where it can be like rule based, or you can layer in like kind of all these different if and, if then, if or statements. That's kind of getting more into a strategy, or just like a data driven portfolio that can just like manage your positions, manage your taxes, and then just kind of like go with the general premise of that concept. So either one, and happy to help you get it built. And if it's profitable, happy to help you share that with as many people as you want.
Do you want to build this high performing poker players one?
Yeah, that'd be great. That'd be awesome.
Okay, let's do it.
Awesome. Let's do it. That'd be
All
great.
right. How do we do that?
Yeah, so we'll probably just take that offline, but it should take like 30 minutes, 40 minutes. Like, I think first we just need to do a little bit of research in terms of like what public companies have CEOs, or maybe we expand that to just like overall. We could try this in two forms. So, like one could just be just CEOs. The other could be like any executives that are like public, at least play in the WSOP, if not more. And that gives us our list of companies, and then we just determine like how big the positions are, how we want to manage them, how we want them to adjust, etc. And then the rest is kind of, you just invest in it.
Okay. Yeah. It looks like Steve Aoki.
Okay.
WS.
Yeah. I knew he played in WSOP, but I didn't realize he was a CEO of a public company. What? He's a DJ, yeah.
Yeah. Well,
Yeah.
no, he sits on the board of T-Mobile
Okay.
apparently.
Yeah.
And
Gotcha.
then David Einhorn is the founder and president of Greenlight Capital. He's a
Yeah. So
principal leader.
that's probably what we could end up doing is even if they're not a CEO, if they're like on or around the executive level, so like board or CTO, CEO, etc. Like that would probably broaden the results a good bit. And then
Bill
yeah,
Perkins.
Bill Perkins. Yeah, Bill Perkins is I've he's played a lot. He's played a lot on like televised events.
Okay.
He's a fund manager, I believe.
How many do we need to know?
I mean, really, just a couple. But there's a couple ways we could do this. So I would say you get that list, and then we'll go from there. And turn it into a product.
Logan, where can people find you?
Yeah, so I'm active on Twitter and LinkedIn. I'm just at Logan Weaver on LinkedIn and at Log Weaver, I think, on Twitter. And then Surmount is just Surmount Invest across our socials. And yeah, if you want to check it out, if you're interested in kind of automating your investment accounts with data-driven strategies, just check us out at www.surmount.ai and let us know what you think. We're always excited to hear your thoughts.
Thanks again, Logan. I really appreciate everything that you've shared with us today, all your stories and experiences, and getting that real 360-degree view of you. I think it's going to be really exciting for the audience. Thank you so much.
Yeah, thank you so much for having me. I'm excited, and I'm excited to get that public CEO players up on Surmount. That way, people can invest in the best poker playing CEOs.
Love it. All right, take care.
Awesome. All right, thank you so much. Have a good one.
Thanks. Bye.